Welcome to my daily report market analysis videos with me, which is Pro Market Analyst at Hantec on Monday the 8th of June. We've got a bit of a mixed outlook today. We had such a huge surprise on the data for non-farm payrolls on Friday. There was a big jump again in risk appetite, but also we saw that the dollar started to reclaim a little bit of lost ground. That's sort of a mixed move today. Big spike higher in treasury yields as expectations of how the US is emerging from its lockdown period, seemingly expectations being revised higher. And that really has impacted through the treasury yields, yield curve steepening, the widening spread between the shorter and the longer dated yields there showing that. But also we saw some dollar strength, which has just sort of dissipated slightly. It's sort of mixed a little bit because you'd think that perhaps yield curve steepener is dollar strengthening, and it effectively is. So that could start to sort of weigh on how some of these market moves have gone. Certainly euro dollar may start to lose a bit of steam. And the Aussie dollar is an interesting one that I've got as my chart of the day as well. But other factors we've got playing out today is an oil price increase again. We've seen that OPEC Plus have agreed to an extension to their production cuts by another month. So subsequently the oil price continues to creep higher there. But also we've had some better than expected Japanese data out. GDP was revised slightly higher. It was still negative, and Japan is in recession effectively, but it was raised slightly higher from 0.9 to 0.9 negative to 0.6 negative, and that has again sort of helped to lay the ground for reasonable positive risk appetite today. Nothing too decisive, mixed moves basically on the European equities. Futures in the US were slightly higher today. I mean, really strong moves on Friday into the close. And it's interesting to see how that has just continued today. You can see that here through the futures on the S&P, on the E-minis contract. And yeah, it's sort of a slightly mixed outlook. You've got the Fed on Wednesday, which you'd argue the market will be now starting to sort of look out towards. And that's obviously... that Fed payroll, that non-farm payrolls report is going to really throw the cat amongst the pigeons in terms of how the Fed lays out its stance going forward. So it'll be really interesting really interesting Fed meeting then this week. In terms of data points, we've got no data other than what we've had out early morning today, but we do have Christine Lagarde speaking at 2:45 today. Now, in terms of my chart of the day, I spoke about it earlier, the Aussie dollar. Aussie dollar has been on a run, really strong run higher, and so much so that we are now within sniffing distance of the complete 100% Fibonacci retracement of the sell-off, the big sell-off related to COVID-19. So what a rally that is on the Aussie. But you would argue, is it starting to run out of steam? Now, first thing to say is that MACD lines are incredibly strong still. RSI is at 78, but again, that is really extended. If you look at historically, it's at 2.5-year highs pretty much on those MACD lines. On the RSI. So you're starting to think whether, well, we're approaching key resistance at 70.30. You've got the RSI extended. MACD lines are really strong, but again, also extended. And you're starting to wonder whether this is just sort of losing a little bit of its way. I mean, there's no sell signals yet, I might add. No, apart from our slightly negative diverging MACD on the hourly, slightly negative diverging RSI on the hourly as well. So you'd say that, well, if the RSI starts to drop below 40, I would say that that is a signal. MACD lines, if they go below neutral on a decisive basis, I think that is also a signal. Support-wise, you'd be looking at 69.30. That was Friday's reaction low, there or thereabouts, a couple of pips below that, 69.30. 68.80 and then 68.55 area are the last three higher lows. But you can see here, if I zoom in here, you haven't actually seen the Aussie below a previous day's low since all the way back in late May. So that's a good 2 weeks. We've run higher on a daily basis consistently. So if you start to see that trend also rolling over, and as I said, that is 69.30, that Friday low. If you start to see that coming through, then maybe you start to see some profit taking, and that key resistance at 70.30 obviously is an important level the market will be looking out for now. So yeah, the Aussie is reaching a critical phase, and obviously, as I said, that yield curve steepener that you've got in US yields is effectively US dollar supportive. So you've got a battle now between the possibility of the US dollar starting to reclaim some lost ground, but also the ongoing positive risk appetite, which tends to be Aussie dollar strengthening. So bit of a conflict there, and it'll be interesting to see whether you start to see some profits in a really strong run higher on the Aussie. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, but also you can click to watch our Trader Talks videos to gain some top trading ideas.